So everyone, welcome back to Corporate Decoder, the place where let's just say some executive musical chairs have been happening and it's time to see who's sitting where. Before we dive in, if you love breaking down the nitty-gritty of company filings, make sure you hit that subscribe button and ring the bell. And hey, we've got a fantastic community over on Discord linked in the description below, so come hang out. Today we're looking at TransMontaigne's Partners LLC, or TLP, and their latest update. This isn't a deep dive into their quarterly financials, but rather a crucial announcement about leadership. Think of it as a game of musical chairs in the executive suite, and we're here to decode who got the last seat. So the big news is that TLP's Chief Executive Officer, Randall T. Maffett, is stepping down as CEO. This change is effective September 2nd. Now, don't think Mr. Maffett is completely out of the picture. He's actually going to be joining the board of managers for TLP Acquisition Holdings LLC, which is the 100% owner of TLP. He's been the CEO since 2023, so he's been in that top role for a couple of years now. But the really interesting part is who's taking the helm. TLP Acquisition is appointing Jesse Aronivos to take over as the new CEO. Also starting September 2nd, Mr. Aronivos is 52 years old. He comes from InLink Midstream LLC, where he was the CEO from 2022 to 2025. That's a pretty recent and significant role. Before InLink, he had a long career with Kinder Morgan, a pretty major player in the energy infrastructure world. He held various executive positions there, including leading their energy transition ventures and heading up their CO2 segment. He actually joined Kinder Morgan back in 2003, so he's got a lot of experience in this industry. And before his time at Kinder Morgan, he spent 5 years at ConocoPhillips working in finance and commercial roles. Academically, he's got a business degree with a finance focus from the University of Texas Permian Basin. And he's also a certified public accountant, which means he's got a solid understanding of the financial underpinnings of these businesses. So what does this all mean? Usually when a CEO changes, especially a relatively new one, investors and analysts are watching closely. TLP is also tucking in a press release about this announcement as an exhibit, which is pretty standard but reassuring that they're communicating the change clearly. Now, while the filing does list contact details, we're not going to focus on those. We're here to decode the business strategy and leadership impact. Interestingly, the report mentions that as of the filing date, TLP has no common units outstanding. This usually means they are a private company or their units are held through a different structure, which is important context for understanding who their investors are and how they operate. The date of the report, September 2nd, 2025, lines up with the effective date of these leadership changes. This means they were preparing this report as the transition was actually happening. They've attached the press release as Exhibit 99.1. This goes into a bit more detail about Maffett's departure and Aronivos' arrival. The date on the press release is September 3rd, just 1 day after the official changeover. Now, looking at this from a broader perspective, a CEO transition can signal a few things. It could mean the previous CEO's strategy wasn't yielding the desired results, or it could be a planned succession with the previous CEO moving to a different role like a board position. Given Mr. Maffett is moving to the board of the parent company, it suggests a planned transition rather than an abrupt departure due to poor performance, at least on the surface. Mr. Aronivos' background is quite interesting. His experience at Kinder Morgan, especially with their energy transition ventures and CO2 segment, suggests he might bring a focus on modernizing the business or adapting to evolving energy landscapes. Companies in the midstream energy sector like TLP are often involved in transporting and processing oil and gas, and they face increasing pressure to adapt to cleaner energy sources and more stringent environmental regulations. His previous roles indicate he's navigated these complex areas before. The fact that TLP has no common units outstanding means it's likely not a publicly traded entity in the traditional sense, so the typical stock price fluctuations and investor reactions we often analyse might not apply here. The key stakeholders are likely private equity firms or other large investors who are making decisions about the company's direction. The move to appoint someone with a strong background in energy infrastructure and focus on newer ventures could signal a strategic shift aimed at growth or adaptation for these primary investors. We don't have detailed financial tables here to pick apart specific numbers like revenue or profit. Typically in a filing like this, the financial tables are where you'd see the real story of a company's health. But this report is focused on a key event, leadership. And leadership changes are often the catalyst for future financial performance or strategic pivots. Also, however, we do see some key organizational data. TLP is incorporated in Delaware, a common state for business formation due to its flexible corporate laws. Their commission file number is 001325505, and their IRS employer identification number is 342,221 Taikin. These are identifiers that help distinguish TLP from other companies in regulatory filings. They also mention their principal executive offices are in Denver, Colorado, with a phone number that we won't focus on. They are not checking the box for being an emerging growth company and have also opted out of the extended transition period for new financial accounting standards. This suggests they are a more established entity that is comfortable adopting current accounting practices without delay. From my perspective, this executive swap at TLP is a significant event. Bringing in someone like Jesse Aronavas with his background in managing large energy infrastructure assets and his experience in evolving energy sectors indicates a forward-looking approach. The parent company, TLP Acquisition Holdings, LLC, is clearly making a strategic move. The lack of publicly traded units means the performance metrics we normally crunch are internal, but the choice of a new CEO with a strong resume suggests an ambition for growth, efficiency, or adaptation to market changes. The energy midstream sector is dynamic, facing challenges from energy transition and regulatory shifts, so a leader with diverse experience is a strong signal. A potential risk could be how smoothly this transition affects operations and employee morale, but the appointment to the board suggests a collaborative handover. Overall, TLP seems to be positioning itself for the future under new leadership. What's your take on this leadership change at TLP? Do you think Mr. Aronavas's experience will steer the company in the right direction? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate insights. And don't forget to join our Discord for more great conversations. Thanks for watching, and we'll see you in the next one.